Remember, only 1.5% of startup and early-stage companies raise enough capital to survive, let alone thrive. This is because they rely on financial institutions or angel investors to provide the capital they seek in one single tranche. These young companies are simply just too risky for the financial institutions or angel investors to invest a significant single amount in, so most entrepreneurs simply fade away. There are only two ways to legally raise capital in the United States. 1. Produce a business plan and submit it to financial institutions and/or angel investors for a single, significant investment, or 2. Sell securities directly to many individual investors, privately, publicly, or through a SEC-registered broker-dealer, but only if you qualify. In any event, you can sell securities to capitalize your company with any amount of capital, as there are no minimum amount limitations under securities laws. Whether you need $100,000 to open a hair salon or $500 million to build a REIT, our corporate engineering conservatory will equip you with everything you need and save you a ton of time and money in the process. In a market environment where venture capital and private equity firms and even angel investors rarely, if ever, invest a single, significant amount of money in any startup and early-stage company in one single tranche, spreading the risk over many investors with smaller investment amounts by selling securities is a far more effective approach to raising capital. More importantly, selling hybrid securities, such as convertible bridge notes or convertible participating preferred equity, with a marketable deal structure directly to investors is without question the most effective way to raise substantial amounts of capital while allowing you and your founders to maintain the vast majority of equity ownership and voting control. A marketable deal structure is a win-win for both entrepreneur and investor. Most startup and early-stage companies haven't a clue on how to put together a marketable deal structure and conduct a securities offering effectively or legally. Some entrepreneurs actually unintentionally violate federal securities laws with pitch decks derived from a business plan, and the penalties can be severe. Most entrepreneurs may rely on their attorney to write their PPM, which stands for Private Placement Memorandum. But the deal structures they put together are almost always too dilutive to warrant any serious investor's attention. After investing tens of thousands of dollars to produce a PPM, the document is inherently worthless due to a dilutive or confusing deal structure. There's no way we would introduce these offerings to our co-investors or broker-dealer community. This is why most PPMs don't effectively raise capital. Do yourself a favor. Learn how to do this right within our corporate engineering conservatory the first time or not at all. Dominate the process or be dominated by it. The financial architect system within our corporate engineering conservatory was built specifically to address and solve three critical issues for entrepreneurs. 1. Affordability. Financial Architect saves entrepreneurs up to 95% of the traditional cost of creating a securities offering document, or PPM, in a fraction of the time. 2. Marketability. Financial Architect creates marketable deal structures using hybrid securities that sell in today's marketplace. And 3. Deliverability. Financial Architect provides access to our VC fund, Commonwealth Capital Income Fund, and our co-investor corporate and accredited investors, as well as our broker-dealer contacts. Additionally, one can now advertise the securities offering and/or hire a CFO or Vice President of Corporate Finance from the securities industry with a golden Rolodex to help finish the job. The Financial Architect system is just the tip of the iceberg within our corporate engineering conservatory. The Financial Architect process starts with 1. Education. The Secrets of Wall Street course enables you to easily and effectively learn the basic fundamentals of securities, tax, and corporate law, and exactly how to apply Wall Street investment banking principles to properly capitalize your startup or early-stage company. Eventually, you will need other professionals to help you through this process, such as attorneys, CPAs, CFOs, and investment bankers. But you need to learn what professional plays what part and when to dominate the process and maintain control. This educational section takes only about 20 to 25 hours to complete. 2. Production. Using our patent-pending CAP Pro, you easily and effectively develop a 5-year capitalization plan by constructing pro forma financial projections and statements that are GAAP compliant. At this point, you can easily design and create hybrid securities, valuate the company, and price its securities post-money, resulting in the type of marketable deal structure investors seek. This section also enables you to easily produce a securities offering document, or PPM draft, compliant with U.S. federal and states' securities laws for legal counsel review, with marketable deal structures that attract even the most sophisticated investors. This production section takes only about 15 to 20 hours to complete. 3. Execution. Learn how to effectively sell your company's securities to us through our VC fund, Commonwealth Capital Income Fund, and to our co-investors, corporate and accredited investors, as well as through our broker-dealer contracts, if necessary, as well as to other investors locally or around the world if appropriate. This execution section takes only about 5 to 10 hours to complete. The financial architect process further assures the following. 1. You do not sell out too much of your company too early for too little. 2. Your company's capital structure does not become cost prohibitive by implementing rolling refinancing techniques. 3. You and your company are no longer at the mercy of financial institutions or angel investors by building an internal, self-funding finance department and by staffing it with a CFO or vice president of finance from the securities industry. 4. You can spread investment risk over many investors, further mitigating litigation risk, and hence, you, your founders, and other management team members can actually raise and properly manage the capital you seek on your terms. In addition, the revenue generation component of our corporate engineering conservatory enables one to easily obtain proof-of-concept diagnostics through our social proofing mechanism, build socialized marketing lists, as well as engage and execute cause marketing campaigns for selling products and services, as well as securities to raise capital if necessary. Our corporate engineering conservatory is unlike any other so-called investor-to-entrepreneur matching service. We know how ineffective those are. Standardized corporate engineering is about operational, financial, and regulatory litigation risk mitigation for the investor, which inherently benefits the entrepreneur. Our differential rests with the fact that we may actually invest, as will our co-investors, in the companies who make the grade. Properly engineered companies are the only companies we and our co-investors will invest in. In addition, instead of outright rejecting those who do not make the grade, our corporate engineering conservatory enables those entrepreneurs to effectively raise capital by selling securities directly to investors in compliance with federal and states' securities laws. In any event, when it comes to raising capital, there are no guarantees, only degrees of probability. Our corporate engineering conservatory raises the probability to the highest degree possible. How can we make such a claim? Because this is the Wall Street process adopted for Main Street companies. If the process didn't work, Wall Street wouldn't exist. Our corporate engineering conservatory could be free, as its primary purpose is to filter startup and early-stage companies for investment into our VC fund, Commonwealth Capital Income Fund 1, and to our corporate and accredited co-investors, as well as our broker-dealer contacts. However, we've learned that it's best to only invest in companies that are willing to invest in themselves through this process. Hence, for a minor entrance and monthly maintenance fee, you can compete for capital like no one else. There's absolutely no risk on your part, as we offer a 10-day money-back guarantee designed to give everybody a fair shot at realizing their entrepreneurial dreams. We're excited that you've chosen this path that only the exceptional management teams will complete. Since you've made it this far, you're in the league of quality deal flow we're looking for. We and our co-investors are waiting to review your well-engineered company and the marketable deal structure within your securities offering documents on the other side. So take heart, there's real money with real interest at the end of this journey. So you can continue to beat your head against the wall with worthless PPMs, impotent business plans, and pitch decks that could get you into trouble with the SEC, or create a company your competitors will envy as the force to be reckoned with. Invest in your company's future by joining our corporate engineering conservatory now.